Hi, everyone. My name is David Kosmeter. I'm the creator of TimingResearch.com, and this is the Crowd Forecast News Show for September 25th, 2017, where we will be discussing the 209th weekly report, which you should be seeing on my screen right now while I'm talking. If you have not had a chance to take a look at this yet, you can go to TimingResearch.com and download the full PDF there. Also, for those watching live, you should be on the YouTube page where you can see the live chat section. So feel free to type in any comments or questions there during the show. And I have Dean Jenkins back to moderate today, so I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David. And it's good to be back here. I appreciate you inviting me back to moderate again. I always look forward to this. This is a great forum, and you do a great job of getting some panelists to come and make comments on what's going on in the market, to give some their trade ideas. So I look forward to it. I always learn something when I show up here. So I think I will probably again today, and hopefully the folks watching will as well. We'd like to go ahead and start off with the panelists. And it looks like we're missing John. That's too bad. Hopefully he can join us in just a little while. But we'll go ahead and have the panelists just give a really brief introduction, 1 or 2 minutes, just your name, what your specialty is, what your focus in, your service. It'd be great to get to know you. And Anka, why don't you we'll go alphabetical order, and so you lead off and just introduce yourself.
Thank you, Dean, and thank you so much, David, for having me on the show today. My name is Anka Metcalf, and I'm a professional independent trader that is specialized in equities and futures. For the last 14 years, I day trade futures only 2 hours a day for about 9 o'clock to 11 o'clock Eastern. And for the rest of the day, I swing trade stocks. And I usually take about from 2 to 5 positions a week, depending on the market environment. Also, prior to becoming an independent trader, I come with 10 plus years in investment banking in Europe. I'm also the founder and CEO of TradeOutloud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the equities and the futures market. I'm also a designer, the designer of a proprietary institutional trading system, and that is based on price support and resistance. And when I'm talking about support resistance, I'm talking not only about classic supply and demand, but 7 layers of support resistance, specific trigger times that occur throughout the day for the London session and the New York trading session, because we're talking about futures as well as equities. For equities, obviously, for the Eastern, because I specialize in U.S. equities, but for futures, the system can be applied. Obviously, the same system can be applied for the futures trading in the London session. These trigger times are correlated with precise price zones. I take into consideration chart correlation and a strict set of trading rules that enables me to identify trades with these, and also a 10-point scoring system that enables me and my traders to find trades not only with these, but to be able to stay in trades for a longer period of time for more profits.
All right. Well, thank you. And again, this is the first time we've been on the show together, so I look forward to hearing how your analysis of the markets and some trades, how that stacks up, because it's going to be something different than what I'm doing. And like I say, I look forward to hearing different perspectives and learning something.
Likewise, I always find that you always learn something, and it adds up to the big bag of education, which is always great.
Yeah, absolutely, absolutely. So the next panelist, I have known for quite some time. We've been friends for a number of years. It's Bennett McDowell, and it's great to be here with you, Bennett. I always enjoy hearing from you and talking with you and hearing your perspective. And for folks watching, Bennett, was really my mentor several years ago and helped me turn the corner to becoming a very profitable and successful trader. So I just want to give him credit for that. And Bennett, why don't you take a minute and introduce yourself?
Well, Dean, thanks, and it's great to be here, and likewise, my friend. I started back in the 1990s with TradersCoach.com, and before that, I was at Prudential Securities and Morgan Stanley. And it's been quite a ride since then, because the technology has, of course, changed so much as well. But we do a lot of coaching worldwide, which is why we really started out as TradersCoach.com. And we also have software, both focusing on risk control, entries and exits, the ART software, and all our enhancers and so forth. And so we help traders really at this point worldwide just to be the best they can be. We trade a variety of different markets, from futures, stocks, ETFs. Basically, we pretty much don't do Forex, but we do pretty much everything else. So that's kind of our wrap.
All right. Very good. Very good. It looks like we have John was able to log in here. John, are you live?
I'm live, brother. Thank you for that. I'm sorry for the delay. We have baby issues at the house. Sick baby over the weekend, and just a lot of. I'm sure you can sympathize with that. So sorry for my tardiness today, gentlemen.
Not a problem. And there's, when the baby's sick, everybody's
sick. Everybody's sick. So yes.
Well, very good. Well, we're just getting started. We're just doing an introduction. So why don't you take a minute and talk about who you are, what you got going on.
My name is John Netto. I'm a cross-asset class futures trader and author of The Global Macro Edge, Maximize Return Punitive Risk. Had the pleasure of presenting with Bennett McDowell several times in the past. It's good to see my old friend here on the webinar. That's me. I look at the market from a three-dimensional perspective, looking to measure market strategies performance on a return punitive risk basis. And in that vein, I created the Netto number to measure that. And I look forward to sharing my thoughts today and hearing the thoughts of my fellow panelists. And thank you for the opportunity to present.
All right. Hey, glad to have you here. Yeah, we were just on the Analyze Your Trade show last Tuesday. It was good to hear your perspective. But I didn't hear about the Netto number. So I want to hear about the Netto number as we get into this here. That sounds good. That sounds interesting.
Absolutely.
So we're going to start off. David Kosmider is the creator and producer of the show, and he publishes a report every week based on a survey responses from everybody who responds and the attendees viewing. And so last week, asking the question whether people think the S&P 500 will go up from Monday's open to Friday's close or down from Monday's open to Friday's close. 56.1% said down. And based on the magic algorithm that David has created over the years, his prediction, cranking it through that magic, is that there's a 62.5% chance that the market will close higher. So we'll see. He's had a pretty good accuracy rate on that report. What we're going to do is go around to each of the panelists and just ask, do you think the S&P 500 will be up by Friday's close or down, and what your confidence level is? And don't give your reasons yet, because we're going to do that on the second round. So we'll go again in alphabetical order, same order we had, and just say, what do you think, Anka? Is the S&P 500 going to close higher or lower, and what's your confidence on that?
Well, here's the thing. First, I'm going to start off by saying that this week we're going to get a lot of releases, and I think that we're going to get a lot of activity in the market today. We started with the S&P that broke the 2,500 level a little bit, about 10 plus points to the downside, and now it's put in some bottoming tails. I'm very neutral as of right now as to where the S&P will end on Friday. I really and usually don't make predictions. I just look at the technical pattern. It is sitting at that fine line in the sand, and at this point for me, it's a 50-50 shot. It can bounce from here or it can break from here. 2490 area is a minor support area that can actually move beyond this level to about 2480 or so, and from this point can bounce back to 2500. So I would say I am neutral on the S&P 500, and for me, I am going to take it one day at a time.
All right, so neutral. We can't We can't nudge you 1% over the
Well,
line?
I would say at the SPX has right now like kind of like a 50-50 shot, either to bounce or to get rejected from this 2490 level. So I would say, I don't know, let's go with 30% to the downside.
Okay. So Anka's down, but with the,
only 30% to the down. I still think that it's by the end of the week, it's going to go back to 2,500-ish area.
All right. I think I got what you said.
Okay, so what I'm saying is that I think that it at this point it may bounce to $2,500 by the 2,500 by the end of the week. So I favor more the upside rather than the downside. Yeah.
Okay.
So I'm bullish. Yeah. At this point, as of today, as of right now, the way it is setting up, I am more bullish on the SPX moving forward.
Okay.
Even though we're having a down day. Okay.
It sounds like you have very low confidence though, because you're pretty much neutral on it, right?
Yes, exactly. I usually take it one day at a time, and I'm holding off for all my swing trades. So I'm usually aggressive on Mondays on swing trades, so I'm holding off a lot of my swing trades.
Okay, fair enough. All right, and Bennett. So we'll get to the reasons. We'll show a chart on the next round, but just in terms of direction, up or down, what confidence on the S&P?
Well, I think Anka's analysis was pretty much right on the button, because I've looked at a lot of intraday time frames, and they're saying opposite things on different time frames. So it's a little bit of a quagmire to be predicting what's going to happen by the end of the week. But I think it looks like from the shorter term time frames on the S&P, probably a little bit of downward pressure early in the week. I agree that probably with Anka that we could end up around 2,500 by the end of the week, maybe a little higher. One of the charts I look at is the 30-minute S&P chart, and that's one of the indicators I look on that says that at some point it will return to 2,505, maybe a little higher. But the million-dollar question is, how many days will it take to do that? And I'm pretty neutral on that. It's tough to tell. That's a 30-minute chart, so it could happen early or later in the week, or not at all until next week. So confidence level is not very good, which is because of the charts being so different in different time frames. But I think I'm gonna, if I have to make a prediction, I'll say a little bit higher, like 25.05, maybe 25.10 by the end of the week.
All right. Okay, so we got two up without very much confidence. So we'll see, John. Here's your chance to stand out, be something completely different than the rest of the panel so far.
Down 65% confidence. I'll explain in the next round. Like you outlined, I'll explain in the next round.
Perfect. Okay, I like that definitive, down 65%. And I'm actually down as well, and I'm at 75% confidence on that. So make notes here, 75%. It's kind of like this guy, what was his name? Mead, who predicted that the world was going to end on last Saturday. So he was wrong, but one of these days someone's going to get that right, but they're not going to get any credit for it, are they? Because there will be nobody around to. But by the end of this week, one of it, someone will be right, somebody will be wrong here. But it's fun to talk about and particularly to hear the different reasons for it. So we're going to go back around, and this time we'll share a chart. If you got a chart or some kind of graphic or just display to kind of, you can elaborate on your rationale for your prediction for the rest of the week. So we will, with you, Anka.
All right, so I have started sharing my chart right here. I have the SPX. So this is the level that I'm looking at. Obviously, I'm looking at the daily chart. I'm looking for a continuation higher, and I agree with that 2505, 2510. Actually, I do see it. I do see this 25 as the big area that is going to create a lot of issues right here, the 25. This is also, so like I said, this is a double bottom right here on the daily chart, lots of support. It was tested. This is a peekaboo low right here into this resistance area that created this shelf. Right now, how long this shelf is gonna hold this level, we're going to see. What is important is that if we've learned anything from 2016 and from 2017, from January till now, is that all the dips have been bought. Even the shallow dips have been bought. So everybody is watching right now these pullback levels, and as you can see here, they're not very aggressively. When you look on the hourly chart, they're not very aggressively short. The pattern has put in some bottoming tails right here. It's trying to bounce up a little bit. The first test is going to come at 96, 97 area, and 2,500 is going to be that threshold. If it's going to break above it, yes, it might have odds of continuing higher. And, it's been said here that I would love to know as well when that's going to happen, but that's the only reason why we should take it one day at a time, especially because this is a very tricky market environment. So overall, if the price is going to get rejected at this 2,500, obviously it's going to come back down. So this is going to be the number one thing on my radar right now, to see how the price is going to react at this 2,500. And from that point on, I'm going to be taking my trading decisions.
All right, very good. And you've got a very detailed analysis and rationale for it. I think you made a strong case. Bennett, if you want to go ahead and show a chart and talk about, kind of your thinking on what you're seeing there on the S&P for the week.
Okay. Well, I've got two charts loaded, and the one on the left is the 15-minute S&P E-mini to give me a short time look of what's going to happen early this week. And it looks to us like, it's still obviously in a downtrend, short-term downtrend. We may see that continue on for another little bit of time here for the rest of the day. But if we look on the right-hand side, the 30-minute time frame is showing that we are in this pullback as well. But note that we have in our middle indicator, which we call the PTF, Dean, which you know all about, is showing green at this time. And so there's a 75% probability on that indicator alone that we'll get above the 2504 point at some point this week. So that's why I'm saying I think we'll probably close to the upside at some point, or at least above that. Now, whether that happens tomorrow, the next day, or by Friday, hard to really tell. I mean, we could get up there and it could sell off again, and if that's the case, you guys predicting a down S&P by the end of the week certainly could be the possibility. But so anyway, I'm just going with basically a shorter term look, and it looks like at some point we're going to get above 2505. I've looked at some of the longer term charts. They're not really giving me much help in terms of solidifying what's going to happen a little further out. So we'll use these two charts and stick pretty much with this forecast at this point. And John, I just want to say hello. Okay, I didn't get a chance to say hello to you previously, but it's good to see you here. And sounds like everything's going good at home, and that you're busy with your child. But that's normal. That's a good thing.
Well, it's always good to see you and hear your voice again, and it's great we finally got synced up, because I know we both have been on this, and after a couple of years we're finally on the same presentation. So always good to hear you, Bennett.
Absolutely, good to hear you too.
Yeah, and with that, John, if you want to go ahead and elaborate on your thinking. You were 65% downside.
Yeah, so I have a couple of reasons, and I'm being that I was a bookie in high school and read my first book on options and derivatives trading at the age of 12. I've always been a numbers guy, and I would say what helped me make the leap as a trader and really why I wrote the book, The Global Macro Edge, was the ability to incorporate the qualitative with the quantitative, all right? And so when we think about where we mesh up on the calendar, there are a number of factors that I use when making a decision quantitatively and how I arrived at that 65% level. The first one being the most obvious, and that is, what is an 8-point down move in the S&P worth? Because the question, there's a great book out there that I keep on my desk called I'm going to show it here, Super Forecasting, the Art and Science of Prediction. Okay, now, I would love it if everyone on this webinar would buy The Global Macro Edge, because that's the book that I wrote, but I think in terms of the process and the philosophy of understanding how to construct probabilities, and written in a way that's very digestible, the book Super Forecasting, the Art and Science of Prediction by Phil Tetlock, is something that's is a book that has gotten a lot of acclaim. And one of the things that they talk about in there that makes super forecasters is the ability to actually listen to the question that's being asked, okay? And the question that's being asked today is, where do you believe the S&P, will the S&P close up on the week or not? And what's your probability of that, okay? So if we sat here in this presentation with the S&P flat on the day, my probabilities would not be 65% that it closes down. It might be 52% that it closes down, okay, or 51% that it closes down. All right, but an 8-point down move on the S&P is worth a legitimate 15% to an upward probability, given we're now in essence 4 days. We only have 4 days left on the trading week. Okay, an 8-point move in this low volatility environment is worth 1.5 days of gains. All right, so that has to impact your probability scale, just as if we were up 8 points on the day and ask that same question. The webinar happens at 1 p.m. Eastern time on Monday. It doesn't happen at 9 a.m. Eastern time on Monday morning. All right, so that's the first point I want to make right there, is the dynamic adjustment of my probabilities. Number two, this is the last week of the month. I have a rebalancing strategy that I give away for free. You can get signals on for free, that every month measures the performance, and it plays upon the rebalancing that takes place in the passive investment world between stocks and bonds. All right, and we issued a signal this morning. We literally launched the strategy over the weekend for free because we want people to understand how signal services work on the platform, and I'll put that in this thing here so you can sign up for free as well, or just follow me on Twitter. And we went long treasuries, long the TLT, and short the SPY. It's a dollar-weighted basis. It runs a $100,000 portfolio, so we're short 50,000 SPY, $50,000 worth of SPY, which is about 200 shares exactly, and we're short $50,000 worth of TLT, which is 405 shares, I believe, to be correct. And so part of my strategy, as well as playing upon the dynamic portfolio rebalance that goes on this week, where we'll see more treasury buying and more S&P selling as people sell off those, as people rebalance their portfolios in the last week of the month. All right, that accounts for, about a 4% edge. So all things being equal, I'd say this is a 54-46 edge, where that short S&P long TLT component ends up being positive. All right, and the last component is what happened last week. And as we were on the stock show last Tuesday night, talking about different variables in the market, and one thing I warned about was, listen, if we get a hawkish surprise, beta is going to be exposed. All right, and guess what we've seen? A real exposure in beta, because the Fed came out with a very hawkish surprise. None of the dots for 2017 dropped, meaning there were 12 dots that called for one hike before the end of 2017. Those 12 dots are still in place. Those 12 dots are still calling for a hike. So that was something the market was not expecting. They thought that at least one, probably two, maybe even 3 dots would drop down, indicating a more dovish outcome. That didn't happen. So now we have beta that has been exposed. Look at the worst performers today and on Friday. Emerging markets are down. Tech is down. Bonds are higher. All right. So I think that beta drag with a stronger dollar is a factor. We also had the European elections overnight, which, people expected Merkel to be reelected in Germany. What they did not expect was to have such a conflated or such a cryptic political spectrum in Germany, which is going to take her a little while to sort out. That's going to put pressure on the euro. We know that a strong dollar is not beneficial for the S&P. So I have portfolio rebalancing, a hawkish Fed, the fact that the S&P is already down 8 points that I have in my edge that I have to dynamically reprice, all tells me the S&P trades lower on the week by 65%, but more because of those other factors, and the S&P is brought down along with it. And those are my reasons. And that's the fucking global macro edge.
All right. Well, you've made a passionate and compelling case, John. That's for sure. Nobody could say you're on the fence about it, right, or wishy-washy. that, and I appreciate hearing you walk through just to hear your thinking. That's really cool stuff. So I'm looking for down, and I'm basing this on a 60-minute chart off of the E-mini S&P 500 futures contract, and I'm just looking at a real simple wave count here. In late August, the S&P went on to put in several closing highs. We see this as an impulsive move up, and we're looking then, at some point, pretty much every impulsive move up is going to correct. So we look for evidence that that move has begun correcting, and we have it here. We have really clear evidence of the correction beginning on a 60-minute chart. And I like that for, what's the trend for the week? I like 30-minute to 60-minute, but this has the clearest picture. And by what do I mean by evidence of a correction beginning? Well, Dow theory tells us that an uptrend is a series of higher highs, higher lows, higher highs, higher lows. And that trend has ended when you no longer put in new highs, you start putting in lower lows, lower highs, new lows. And we have that. So we have, the definition of a change on this time frame and the beginning of a downtrend. And we have a Fibonacci retracement zone that is between about 2490 and, 2407. And I've also got the Ichimoku cloud, which I really like as an indicator, a predictor of future support and resistance. And you can see the cloud is projected out several bars into the future. And it's interesting that the levels that Bennett we're talking about, right around 2,500 is really where, if price does run back up during the week, that's the resistance, the overhead resistance that we could hit. And even if it does get up to that level, we haven't broken this lower low, lower high, lower low pattern. So that would just be part of an ongoing pattern. And so I also see growing downward momentum in the price oscillator here. This is the owl, which is from Bennett's service. So I see, up here we had, really, really big momentum, big green moves, high velocity, and that confirms that this was the impulsive move. And now we're looking at the corrective move beginning. And again, we got a target down here in this Fibonacci retracement zone. I also, the thing that could spoil this is we got some big reports coming out. I think Thursday's a big heavy day for economic reports, and I believe either Thursday or Friday we've got GDP coming out, and that's a big deal. Probably the biggest report coming out this week is the GDP report, and the discussion about the tax reform, tax breaks is really, it seems like the consensus from what you hear is, they're trying to achieve revenue neutral solutions based on future GDP growth. And so, an indication on direction of GDP probably is going to play big into tax reform, tax cuts, and the market could respond in the short term to GDP as maybe a predictor of what, how big a tax cuts the Congress might be willing to. That's speculative, right? That's unfounded, but I got that in the back of my mind. It will draw my attention. But I'm going to make all my decisions based on the technicals of the chart. Right here, it looks very, very bearish, and I think I'm pretty confident taking a target down into this range by the end of the week. All right, so that we made it around 2 rounds there. Predictions are, and good news is we had a mixture of responses, and that's always good to have a little bit of difference of opinion. I think everybody made a strong case of why they think what's going to happen is going to happen. And next, we're going to move on to the next question, and that is an interesting question that David came up with for this week, and I like it. So I was looking at it, and I don't know if I still have a good answer to it. But the question is, if you could go back and talk to your 18-year-old self, what financial advice would you give yourself? What a great question. So we'll go back up to the top of the batting order here. And Anka, what would you tell the 18-year-old Anka in terms of financial advice?
You know, I read that question and I literally started laughing. It was like, okay, because I was reading through the answers and they were, some of them were extremely funny. But if I go back, you know, and one of the things that, you know, at 18, you're really not thinking about saving. You're really not thinking about, you know, and if you're not interested in the market, then obviously you're not, you know, you're not as keen into trying to save for, you know, for investment purposes. But if I would go back, the only thing that I would be serious about is contributing to that 401k. I mean, that's the one thing that I would that I would definitely consider, and if I was 18 again. And moving forward, keep in mind you can trade your 401k. So first off, get educated. I was fortunate enough because I worked in the financial industry, and I became educated because of the field that I was working in. But if you have, let's say, a different passion, and it's fine, you know, just follow your passion. But if you want to invest, definitely, and if you're at that age, become educated. No matter who's investing your money, you need to have an edge and see, what are they doing for you? Is there, are they taking the right decisions? So be educated, be financially educated. I mean, that would be my advice.
All
to
right,
myself.
excellent.
To myself.
I like it. I like it. So Bennett, what advice would you give the 18-year-old Bennett McDowell?
Well, I think that Anka made a very good point in that at 18, I think we were more focused on going out at night and having a good time than worrying about our finances. Our finances back then were saving enough money to get some beer, right? But anyway, if we go forward, you know, I was in the Navy. John, I know you were in the military too, but after I got out of the military, that's when I really started my financial career. And I think at that point I was an entrepreneur. I think a couple things young folks need to decide, even really if they can at an early age while they're in college. They need to decide if they're a corporate kind of person or an entrepreneur, because the paths you need to at that point develop are totally different. Corporate versus entrepreneur, risk taker versus somebody more worried about going up the corporate ladder. I think those are two separate paths that you have to think about what's best for you and what your personality type is best for. There's no right or wrong answer. You just have to know what you are and then step forward from there. I think if you're an entrepreneur, which I was, I think one of the most important things I learned early on is when you have a business, you have to control your costs. And I think you have to be careful not to spend too much money for growth that may not come. In my early businesses, that got me a little bit in trouble. I always was spending money I really didn't have in trying to create things for growth. And the problem is if the growth doesn't come or a bad economy comes, you're screwed. So I think you have to control your costs very much. And I think that's one of the most important financial things. Yes, savings important, the whole 9 yards. But you know, when you're an entrepreneur, you usually put all your savings on the line anyway. We're risk takers. That's what we do. Okay, so you know, it's nice and dandy to save money and put it in your 401k if you're a corporate person, but as an entrepreneur, you put your money on the table and you risk it, and you just have to sweat it out sometime. And I think everybody here, being an entrepreneur really now, knows exactly what I'm talking about. So you have to really control. I think the cost thing is the biggest issue. I think especially when you're young, you kind of want to feel successful. You kind of are spending money as if your business is successful before it is. And I think you have to be careful about that.
Yeah, Dean, I think you're muted still.
Thank you, David. Now I'm live. So John, you said 18, man, you were already there. At 12, you were reading your first books. But maybe now in your early 30s, like you are.
Yeah, exactly.
You would have some advice for that 18-year-old who's already well down the path. Maybe some course adjustments. What would you tell yourself?
Yeah, great. This is such a great question, and I think Bennett just totally crushed the response there too. Yeah, when I was 18, I had decided to join the Marine Corps. I'd run a gambling operation in high school for 3 years where I'd like learned to make markets and invent point spreads, and had already like understood calls and puts and options, etc., and knew in my heart and soul that I wanted to become a trader. So the advice I would give myself at 18 is probably reinforcing one of incrementalism and a lot of what Bennett just hit on, and that is you learn by taking on risk. And to encourage myself that you're going to make a lot of mistakes. I was a perpetual optimist as I am today, believing in people, believing in opportunity, believing in growth, believing that you can accomplish your dreams, and believing that I can create financial freedom for myself. And that was all the age of 18. But what I didn't understand at 18 is just that perpetual optimism also gives you a bit of naivete that you can accomplish things that maybe you're not in a position to accomplish yet. But I wouldn't suppress that, because I think that's a virtue. And I think that you have to go out there and you have to experience pains. You have to make those mistakes. And you have to learn by taking on risk. And so I would tell myself that the one piece of advice I would tell myself is trust your journey. Trust your journey. Because you're on the right path. You have the right spirit. You have the right mindset. You're doing the right things. Trust your journey is going to make you the person that you are going to become, and celebrate that.
All right. Very good. Very good. Well, I've been thinking about the question. It's a great question, and it's hard to answer and it's easy to answer. For realistic, I wouldn't change a thing. Right? I landed where I landed. I'm really, really happy with. Got the best job in the world, and I'm really happy with where I'm at. And I have success in whatever and financially and in life. But a couple of things I probably would tell an 18-year-old Dean was, like Ben, beer's not a great investment. So, and hey, you might live past 30, so plan for that. That would be important. But most of all, it would be a couple of things you guys have said. Be who chase your dreams, take some risk for sure. But take some risk, but make calculated risk. Don't put so much on the line that it blows up. And it's such a huge setback, it takes years to dig out from, right? Just like Bennett had said, control costs. Don't leverage yourself to the point where, you can, into financial ruin. And that's really a big part of my trading plan today. Take control of your own money. Don't, I think Anka touched on that, right? There's one or two good financial advisors on the planet. But if money, that's the question. How's your financial advisor making money? Do they make money if you make money, or do they make money if you lose money? Right? Be in control of your own money. Be armed with information. Right? I think would be the number one thing. And then again, be who you are. Chase your dreams. Have a bit of a backup plan, and be a little bit, take risk, but take control. Strategic risks. Advice. So that was a good discussion. I loved hearing your guys' answers. So this is the portion of the show. This is where I look forward to the most. It's all good, but this is great. And this is where we ask each of the panelists to share what their current favorite trade is. Now, John delved into that just a little bit. That's good, but if you want to expand on that, or if you got something else. We'll go around again, top of the batting order to Anka, and say, what's your favorite trade right now that you'd like to share with the audience, Anka?
All right, sharing my screen in just 1 second, just to put it up. All right, copper is my favorite trade for. Okay, sound check. Okay, I guess. Okay. All right, so I'm sharing my charts right now. Copper continues to be in my week 2 of favorite trades, and this trade, I love this trade right now. I love it over $2.97. It has room to run to 210 and 215 area, so that would be a good risk to reward ratio. I love the way it is just basing here. It's just doing nothing right now. It's just digesting this area for a continuation higher. It has stabilized into this prior cluster on the daily chart, so I do have this actually as a swing for moving higher.
All right, very good. What was that similar?
It's copper. It's /HG copper.
Okay.
A futures.
Okay, is that copper?
Yes,
Copper futures.
Yes,
Okay.
yes. I did have gold this morning, but it's too late right now. So I did mention it to my Signal clients. Gold was perfect today. It bottomed out. It had a really nice breakout over 13. And actually, my target was for the short swing was into 13.20. It actually made a high 13, 14 area. So yeah. So copper is my next.
Copper, good. I'm actually bullish on gold on the long term. I think on the daily charts we see something happening there. That's a long term.
It looks very good for a rotation here back into the 20s.
Yeah, very good. Okay, Bennett, what do you like right now? What trades got your attention?
Okay, can you hear me okay? Testing. Just want to make sure the mic came back on. Okay, great. I'm liking FireEye right now. We've been in it a while. We've done pretty well in it. There's a couple I like. I like Newmont Mining, NEM right now. I've got a list here of quite a few that I've recommended and I like, but FEYE symbol looks like it's going to hit a target range based on our analysis. This, of course, Dean, because you're familiar with the way I do this, this would be a wave 4 target zone here. We've had a wave 3 bottom. So we're looking at a target zone between 25, roughly and a half, up to 35. We're at 16, almost a double your money one. And all indicators at the bottom, the enhancers that we use from the OWL, the PTF, and the TLM, which we use, are all indicating more highs are coming. So we think this is a really good one. Now, in terms of once it reaches this target zone, we'll wait for momentum to reverse, have the market eventually take us out. We actually think this is a counter trend trade from where it has started at the beginning of 2017 to when it gets into the target zone. So once it reaches the target zone, we should see at some point some negative momentum coming back, some selling, driving it back down. So this is a temporary short-term trade, which could last quite a bit longer, actually. Sometimes these counter trend trades can take quite some time, but it's been a good one, and we think it's got some more room to go.
Very good, very good. I'm actually long FireEye myself, and with my advisory service as well. So no surprise that we're.
I was going to say, what a surprise, right?
Yeah,
that's funny.
Yeah. All right, but I do have some other ones too, so I'll be sharing those in a minute.
Great.
John, what do you like? I know you talked about TLT and SPY. Is that still your favorite, or is there anything else?
That's a good trade, but in terms of like isolating one position, sort of feeding on that, on what was the last 2 weeks in the blow up of fixed income globally, not just with the TLT, but with German bunds and with the UK gilts. Every major fixed income, whether Canadian fixed income, all the G8 fixed income markets just came under tremendous pressure last week. I think as you look for a retracement, you want to isolate, okay, of those fixed income markets, which one has a little more geopolitical risk embedded in it, whereas you talked about the tax plan earlier, Dean, that could come out this week, which could be very bond bearish. The political situation from the German election over the weekend, and given the sharp down move and some of the structural requirements that firms will have, actually long German bunds. They're at 161.95 right now. 162.50 in the next 48 hours is very possible. As we talk about the sell-off and risk that's happened today through emerging markets and through beta, i.e. the NASDAQ, the German Bund is one of the best performing risk-adjusted markets on the board, if not the best right now. I think that reallocation of capital, given that a lot of CTA types were stopped out of their fixed income longs last week with that final flush down following the Fed decision, I think the long end of the yield curve, especially the German yield curve, has a chance to pop in the next 48 hours. And I think that's how I'm long in my signal service. And I think that's where we're going to head in the next 48 hours. So long the German Bund, looking for a move to 162.50, short term 163 in the next 7 to 10 days.
All right, very good. Thank you. And so here's my one of my current favorite picks. This is GoPro, and you can see there's been just a massive move down in GoPro. So that was the big impulsive move, and we're looking for a correction to that. So this would, in Elliott wave speak, would be a wave 4. zone for this, the Fibonacci retracement zone is actually from 28 bucks up to about $40. I've got a target set on this one just at the last high. It's kind of a conservative, just in case it fails that resistance. But the reward to risk on this trade, even at that, if it does fail there, is phenomenal. So I'm zooming this in a little bit, and you can see, you know, we had that massive move down. We had this thing channel for a long time and then break out. And again, when you heard me talk about Dow theory with a high, bam, into new high. That's where we took our entry, was at 1102 on GoPro. We're in a few ticks of profit. This is just getting underway. You can see we've broken above the Ichimoku cloud, and with the OWL PTF all in agreement with this trade. This thing looks like it could really take off. And again, you know, a conservative target from 1102 up to 17, right? That's a 70% gain, and it could keep going farther up into this retracement zone, you know, up above 28 bucks. So that's one we're gonna keep a pretty loose stop. We're gonna let this baby run. We think it's got some real potential. So I don't know if that was on your radar screen or before or not, Bennett, but if it wasn't, I bet it is now.
No, it actually was already. It was already on one of our lists. In fact, I got the chart up right now. We're looking for a target zone, Dean, a little higher than you, 37 to 56 possible on this. So
yeah, I'm not surprised.
I think it's fun.
I'm being a little bit conservative, right? And but I think it could absolutely hit those kind of levels. It'll take some time, for sure, but that's a pretty exciting chart. I like it a lot.
And it has broken out recently, so that's an ideal time to get in.
Right, but there's plenty of room still to get into this trade. It's not over.
Oh yeah.
Long.
Oh yeah. No, it's a good one right now. We're recommending this one is at the same time right now too.
Yeah, very good. Cool. Okay. I'll give one more just for fun. If anybody else is, you know, wants to throw one out there, here's one I just really like. We see some rotation in the gas and oil services industry and energy. I'm actually looking potentially for long in crude oil as well. It's got to prove itself out, but it's getting close. But this is a CLR. This is Continental Resources. And this is a wave 5 trade. So we've had the big impulsive move. We've had a perfect correction to it, and now we see a continuation of that trade getting underway. We're in this at 36.89. We're in about $2 of profit on this thing. And again, it's broken up off this bottom. It's begun this continuation. Everything's green. We got a beautiful wave 5 target zone up between 55 and 71 bucks. So CLR just looks marvelous. Everything, there is no issues with this trade in terms of high probability, all my setup criteria, great reward to risk, and we're taking that one. It's going to take, it'll probably take you know, six weeks for this to play out on average. And a great way to play this, we just go buy a call contract way out in time, deep in the money, high delta call contract, and let that thing run. So CLR is another symbol that I like a lot, and that the people who are subscribing to my picks and my trading are with me in this one. Thanks. Okay, well, this is the final lap around the panel, and this is a point where if you have any kind of closing thoughts.
Dean, before we get to that, there was a live question in the live chat.
I think we got time for that, so let's take it. Yeah.
So if anyone wants to comment about this, basically the question was if North Korea does a test of one of their bombs in the Pacific, how might that affect the markets?
Who knows, right? Who knows? They've done quite a few tests. I personally, I'm sure the other panelists maybe have different opinion. Personally, I can't predict. I can't predict what people are going to do or how people will respond to that. So I stay focused in my portfolio being balanced, using risk control. So if there is a big shock to the market, whether it's from North Korea or Iran or whatever, if there's a big shock, I'm protected, and I'm not going to lose very much. And I'm also on both sides. So if it tanks, I'm going to make pretty good money on that. So I just trade the realities of what actually does happen, and I'm trying to be positioned for whatever could happen. So I don't know. what happens if North Korea, does another test out over the Pacific. It'll probably be dramatic, but I don't know if you guys have any.
Yeah, let me chime in on this one. This is probably a little more up my alley in terms of measuring out the impact ratio. So I created in my book, The Global Macro Wedge, Chapter 5 is called Unit of Risk Ratios, and one of the 7 unit of risk ratios I outline in there is called the impact ratio. That's impact spelled MPACT, as in market price action. And so what we've seen from these Korean missile tests is a lessening effect, or a half-life, if you will, of the reaction of the market incorporates. So they've come over a weekend. They typically result in a gap down in the S&P and a gap up in treasuries, a sell-off in risk, and a rally in safe haven assets. All of those tests did not incorporate the North Koreans going out into the Pacific Ocean and launching a bomb. This would be another great high. So there'd be 2 reactions to this. The first would be a gap up in treasuries, because this would be another level higher. And I think that gap up in treasuries would be held. Treasuries would rally, and S&P would sell off. You'd see a rally in the yen, a sell-off in the Nikkei, sell-off in those East Asian equity indices, because this is another level that says that this is actually elevating further. I think the after effect of that, though, would be that this would finally be something that would truly galvanize the international community and NATO to finally bring the hammer down and put a lot of pressure on China to make that happen. So the first reaction, because that would be a step higher in terms of them demonstrating the nuclear capability, would be for the S&P to be down probably 25 to 30 points, okay? It would struggle around there, but then once the sense that wow, this is so horrible, it truly galvanized the international community, S&P would turn around and rally, and treasuries would not sell off commensurately, but would stop going for them. But I think if they did detonate something in the Pacific Ocean, that would not be met with the same reactions the last missile test that flew over Japan that the market just shrugged off. This is a different type of encroachment upon international waters.
All right. Anybody else want to chime in on the North Korea potential? And that sounds like a no. So we'll go ahead and wrap up now with each panelist. If you just have some closing thoughts, and if you have a link you'd like to share, or some kind of offer that you'd like to put out in front of people, we'll go ahead and do this now. So we'll kick that last round off, the last lap around the table with you once again, Anka.
All right. So it's been very interesting, not to say the least. I would like to give my, 2 cents to what has been said about North Korea. I think that, I think we have bigger worries than the market at that point. And but if it comes to the market, if you're definitely looking at a very sharp reaction, if you're trading futures, obviously you don't have to wait till 9:30 in the morning to trade stocks. But if you're a futures trader, you could definitely, and what you have seen is that every single time there was a threat, or when there was a missile test or anything along those lines, the market sold off, and then immediately the market was brought back up. So so that was literally my my take on this. But I think we should have bigger concerns than what the market will be doing at that point. Obviously, you need to be very careful in today's market environment, and kind of be hedged. Also, to wrap it up, we're starting a new class. It is Power Income Day Trading Futures class today, actually at 5 p.m. Eastern. If any of our audience is interested in our class, it is actually a 10-day event where we teach traders how to day trade the futures market, and we also are offering a special on how to swing trade the futures market, but that's going to come a little bit later on. The class is going to come at a later date. And if anybody's interested, they can visit our website, tradeoutloud.com/futures, or they can email me at info@tradeoutloud for more information. And the class deadline is today. It's not a free class, but if they would like to learn more about it, they can email me at info@tradeoutloud.com. And again, the class starts today at 5 p.m. So I want to thank, thank you for having me here today, and thank you so much for the wonderful things that I have learned today from the panelists.
All right, it's great to have you here. Great to meet you and be on the panel together with you here for the first time. All right, Bennett, do you have some final thoughts?
Well, I had a great time here today, and I thought each of the panelists were really knowledgeable and did a great job. And it's good to see, like I said, John again. It's been a long time. I thought John's response on North Korea was right on the mark. I think it will probably galvanize people after the fact. Of course, it'll create some turmoil in the market short term, but I don't know if that will really lead to anything permanent at that point, but we'll certainly wait and see, as long as they don't hit any of our ships out there, right? But in any case, I had a good time. I thought everybody was great. I really enjoyed it. So I hope to come back again. Thank you.
Okay, great. It was great to be on with you again, or on the show, Bennett. Yeah, it was good.
Right.
So,
right back to you.
Yeah. So just to wrap up, I'm sharing my website. It's followmetrades.com. Again, I'm Dean Jenkins. And, if you'd like to find out more, you can go to the website. There's several tabs here with information. We are kicking off a group training session this Thursday. So there's a link here if you want to find out more information. And an easy way just to follow along if you're interested in what I was presenting today, you can go down to the bottom of the page here and sign up for a free newsletter every week. I give my update and outlook on the market, on the S&P 500, on gold and oil, and some additional commentary. So that's available if you'd like to check that out for free. Well, that's it. I had a great time. I enjoyed each of the panelists' contribution and ideas.
I think John still needs to, or did you get to do your closing statement, John?
Oh, yeah, John, because you did North Korea, I got confused. Yeah, if you want to do a wrap up there, John, I'm sorry.
I think you're muted though, John.
Sorry, there we go. Listen, we have a free signal service. There's no cost. I launched it today. It's called End of Month Rebalance. Go to my Twitter at John Netto, John, N as in Nancy, ETTO. That's John, NETTO. You can sign up for this. You get free email signals that comes the last five trading days of the month. We'll tell you if we're buying bonds or selling. Every month we either buy bonds and sell stocks, or buy stocks and sell bonds. It's very straightforward. It's very simple. You'll get email updates on that. It's all free. Go there, sign up, and it's a great way to just give you another resource to work off of. Also, the insights I share with you today, I put into my book, The Global Macro Edge, Maximizing Return Per Unit of Risk. Go on Amazon, check out the reviews. We're crushing it. All right. It's a phenomenal piece of literature that had multiple contributing authors. And the context that I share with you today is how I come to this perspective is outlined in that book. It is my life's work. I put my heart and soul into it, and it shows. Okay, so just check out those things, and thanks again for the opportunity today. Appreciate it.
All right, hey, great to be on with you, John. Well,
Thank you,
David,
David.
I think that's a wrap.
Thank you, buddy.
So back to you to shut us down.
All right. Yeah, thanks everyone. Great show. Just want to remind everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us tomorrow. That'll be September 26th at 9 p.m. Eastern Time for the 5th episode of Analyze Your Trade that Dean and I created together. But tomorrow, Matt Buckley will be moderating. Also, Mike Bassani of Alpha Shark, John Thomas of Mad Hedge Fund Trader, and Michael Filigera of Logical Signals will be on that show. So just want to thank my guests again for today. Bennett McDowell of TradersCoach.com, Anka Metcalf of TradeOutLoud.com, John Netto of TheProteanTrader.com, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.